Good morning, everybody. Hey, welcome to Monday, November 15th. Hard to believe we are halfway through November. And with Thanksgiving coming up, that's going to take out a big chunk of the rest of this month. So, hey, from here, it's kind of a downward slide to the end of the year. I hope you're ready as we prepare for what's happening in the marketplace today. Dave's going to join us here in just a second. But before we do that, let me remind you again, there's only one thing any of us can really control within our portfolio, and that's the amount of risk you have. That's why we put together our core retirement design in order to help people design the retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design visit. Hey, with that, we got Dave coming up next. Looking forward to our conversation now.
FM. Good morning. Hello. I'm so glad you're here. 8:38 now. It's 22 before 9. Time to check in on money and see how Wall Street is treating your retirement funds this morning. Not too bad on early indications to be a spoiler with it all. Let's head downtown, see what's going on. Statler Financial Services' very own Phillip Statler is on the line. Phillip, good morning. How was your weekend?
Good morning, Dave. Hey, it was a great weekend, and it's hard to believe we are halfway through the month of November, and I was thinking it's kind of a slide from here to the end of the year between Thanksgiving and Christmas, and before you know it, we'll be blowing the horns and celebrating the coming of 2022.
Yeah, when I mentioned what date it was this morning when I started out, I had exactly the same reaction. My Lord in heaven, we're only a week and a half away from Thanksgiving. Before too long, you and I are going to be talking about the Santa Claus rally, whether or not it's coming. And it's just too danged early for me to think about that, at least in my brain, although the calendar says otherwise.
That's right. It is here, and it is moving forward. It seems like it's picking up speed every day.
It does seem to be. I mean, I don't know how time flies so fast, but as I get older, it seems to, so I'm going to blame it on old age. Setting the table for the morning, it was a pretty decent day on Wall Street on Friday. Dow was up 179. NASDAQ was up by 157. S&P up by 33.5. And we really didn't have anything negative happen over the weekend to be able to put people in a funk. It looks like we might have a positive Monday ahead of us, too. Wouldn't you agree?
It does. It's definitely looking that way, Dave. And there's not much that could happen that I see that would change the way the markets are moving right now. I mean, there's just not much out there that could come out that I see anyway that could put a hamper on this.
Yeah, the articles I've been reading were, relatively calming as well. I mean, a bunch of economists are saying, don't worry about the Congress spending money like drunken sailors, because when they talk about $2 trillion, they're stretching it out over 10 years. So at least some economists are saying it's not going to be a disaster for inflation. It's obviously not going to help it, but economists were trying to put out a calming voice about whether or not this was pouring gas on that fire. I don't even necessarily agree, but it's nice to see calming outlooks going on. Start out the morning with the Empire State Business Index. That's one of those things that we blow off in more normal times, but every bit of data helps, and it was a pleasant surprise. Up New York way, they were expecting an index of 22, expecting a little rise from last month. It skyrocketed up to 30.9, so that's good news to start the week out with.
Definitely good news, Dave, and we need all the good news we can get, because tomorrow we're going to be looking at retail sales, and I got to think that and the import numbers are going to be pretty important for Tuesday.
I wonder what import numbers are going to look like. Is there any expectation? I mean, we can't get anything off the dang boats. How can our imports be way out of whack?
Well, I'm looking at the price increase. They're looking at a 1%. They're looking for the import price index to increase by 1% tomorrow.
Must be paying for truck gas for everybody trying to pick it up. I have no idea what, there's not enough going off the boats these days, or at least according to popular wisdom, to do it. The retail sales number is going to be interesting, because if it's up too much, we're going to blame it on inflation.
No, that's true. I mean, the expectation that my guys have are about 1.3% increase over the last month.
Well, that would indicate inflation at that point, because you annualize that mess, you're talking about like 15%.
Oh yeah, that's not pretty at all, is it?
Never thought good news could be bad news, but it might look that way. Hey, among the company news that we're following, looking for some sort of a trend, you had some interesting information on Dollar Tree, didn't you?
I did. Dollar Tree, they've picked up a activist investor called Mantle Ridge, who put a stake into the company. They think that the stock price can get boosted up even higher, and they've got some strategies to do that. And so they're trying to. I'm sure they're going to try to get a seat on the board and that type of stuff to make themselves heard. So that's helping Dollar Tree this morning up about 6.5%.
Is this kind of a hostile takeover from manager's standpoint?
I don't know that I would call it a takeover. Just somebody thinks that there's a stock out there that's undervalued and thinks it has some ideas to increase the value of that stock by some pricing strategies for not the Dollar Tree chain, but for the Family Dollar chain that they also own.
Close them up and sell the real estate. I mean, Dollar Tree's been buying too many locations too close to each other. I got to believe that's one of the things that a semi-hostile board edition might be thinking about, because, I mean, there's so many places where a Family Dollar's right across the street almost from a Dollar Tree. That might be a chain that actually outgrew itself a little bit.
Well, you have to remember now, Dollar Tree bought Family Dollar.
Right.
So there could be some duplication there, but they kind of run two different tracks. I mean, it's two different ideas, it's two different pricing strategies. They're really not the same from that standpoint. The Dollar Tree, I think we may start to see some increase in the dollar price, but still, they're two different structures. The Family Dollar is more like a Dollar General.
Yeah, that's the point there too. They're kind of like the Dollar General class of stores, but that whole class of store has generally been a beneficiary of the pandemic for the last year or so. When things got tight, those discount stores ended up generally doing better for the most part.
Well, that's true. That's true, but evidently they have some faulty stuff in their pricing strategy that this company thinks that they have some ideas to fix.
It'll be interesting to watch it happen. Like we said at the outset, it's Monday, so it's a really slow day. I saw a couple of pre-market earning reports, neither one of which, at the very least, the ones I noticed, are household names. Do you see any indication that could move the market a bit today?
Yeah, I've got two companies came in. One everybody will recognize, the other one they won't. The one that's new to me is called Oatly. Mm-hmm. And that's a oat milk producer, which is becoming popular. All the different kinds of milk, almond milk, coconut milk, and now oat milk is becoming more and more popular in the culture we live in now. They came in, they lost 7 cents a share, but that was better than the 10 cents that was expected to lose. However, they missed on revenue, Dave, and that was a big deal for them. They still face some challenges related to COVID restrictions in areas, but they're continuing to try to scale up their production. But they're getting beat up pretty big today. They'll open at a new 52-week low, down 16% to a little less than $10 a share.
The trend continues. They want a 1,000 batting average. Beat the street on earnings. Generally be enough to get you flat even if you missed one of the others.
Yeah, it would. But, you got to have right now, and especially in startups like this, they want to see everything functioning the right way. The other one we have for you is Tyson Foods, and that's one everybody will recognize. They earned $2.30. That was 27 cents better than expected. Revenue top forecast. They've come in and announced some new productivity programs that they say will save them $1 billion annually by the end of 2024. Now, that's a pretty big number. So looking at their stock, it is still trading down a little bit this morning. It was up earlier. It's down about 0.5% now, Dave.
All righty. Not good news to start the morning. That'll trigger us upward. Let's see if we can keep a general upward trend going. You're setting the table again the morning. It was an up day on Friday on Wall Street, and 45 minutes before we opened this morning, I'm seeing some green ink on my delayed quotes. How are we looking early on?
Yeah, we still have green ink pretty much in all the indexes, Dave. The Dow is up almost 0.4%. That's $139. The Nasdaq, I mean the S&P 500, the same. It's up almost 0.4%. That's about $18. And then we've got the Nasdaq up almost 0.5% or $75. So a lot of good stuff happening there. And then if we flip the coin to the commodity side, we got a lot of red ink over there. We've got silver down 0.8, gold down 0.1%, and then crude oil. Man, it has fallen drastically, down 0.9% from Friday's close, but it's down to $78.97 a barrel right now.
I wonder what caused that. Maybe some Arab sheik bought an electric car or something.
I don't know. I just know Mohammed Arian, who's an economist that I followed for a long time. He said, people are projecting $100 a barrel oil prices. He said they're really missing the boat. He doesn't think that'll happen. And he's got several different things that he's relying on for that. Number one is demand. As electronic vehicles and solar and all these alternatives become more and more popular, that's going to reduce the need for as much oil.
I was kind of thinking the fears of 100 were overwrought, but I didn't like it in the mid-80s either. I also get confused when they can't explain why it drops like that, and I didn't read anything that would have prompted it to drop either.
No, I didn't either. So it must be, maybe some people taking some profits. Maybe people read Al Arian and figure, well, maybe it's going to start to fall now. Who knows what's driving oil?
The bottom line is don't count on it continuing because we don't know why.
Exactly.
Overseas markets, mixed Asian rim at the close. We had some up, some down. Nobody really big time up or down. Ditto in Europe midway through their day today. It's a quiet Monday pretty much worldwide. Phillip, watching the markets is always fun, but if your retirement is riding on it day by day, you can get an ulcer if you don't have a plan. How do I find you to put that plan together?
You're absolutely right, Dave. They can give us a call at 863-382-0037 to visit with us and go through our core retirement design process that will help them design the retirement they always dreamed of. Again, that's 863-382-0037. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday on Highlands News Talk 730, and now on 95.3 FM.
You got it. A possibility looking at the schedule. It might be an 11:30 start on Saturday. I'll know for sure by tomorrow. Fair enough?
Fair enough, man. I appreciate it.
All right. Thank you much, my friend. We'll see you tomorrow.
All right. Have a great day.
You too. It's 105.7 Light FM and Statler Financial Services. Phillip Statler on the pitch.
Hey, again, folks, don't forget to take some time, check out our core retirement design. Let's make sure you don't have too much risk in your portfolio. Give us a call, 863-382-0037. Have a great day. Hey, I look forward to speaking to you again tomorrow. Bye now.